is your weekly rate update, and I am very sad to deliver the news that rates jumped at the end of last week. So let's talk about what happened. Conventionals roughly around 6.65 and FHA/VA around 6.2. This is mainly due to the inflation. The CPI and PPI inflation reports were very hot last week. They showed higher inflation figures, which are driven by the surge in oil prices. Also, there were no reports on progress on Iran following the US-China meetings. Adding to some of the fears in the oil market was a report from JP Morgan. They reported that if the Strait of Hormuz remains closed, wealthy nations will see their reserves fall to dangerous levels over the next month and reach operational floors in September. So we'll see how that shakes out. And then as of this morning, basically bonds are attempting to recover. So if you look at the chart I'm showing, red is really bad for rates. So there was a huge jump on Friday, negative for rates. And then this morning it started out green and now it has turned to red. So mortgage bonds are really trying to recover from last week, and we'll see how that goes. Oil prices are slightly lower opening up this week. Bonds are really having a difficult time, mostly due to the oil prices, but there's been a dual shock with the Fed basically buying $40 billion per month in Treasury Bills from between December and April because of liquidity concerns that they have had with banks. Now, the Fed has been buying Treasury Bills directly from banks to inject liquidity, but then they go ahead and lend a lot of that money out, which creates more money and adds to inflationary pressure. So it's not necessarily been a good thing like it was in years past when they had done this. So reports are coming out this week. Today we have the NAHB Housing Market Index. Tuesday, ADP weekly employment data and pending home sales. Wednesday we have mortgage applications, the 20-year auction, and the Fed minutes. Thursday we have housing starts and permits. Fingers crossed I have better news for you next week, but it's not necessarily looking like we're going to make much progress in terms of what's going on with inflation. So I would be prepared for rates to remain kind of where they are, maybe potentially go up a little bit. But the way, one of the biggest things to keep in mind is, marry the house, date the rate, try to get a good deal on a home and refinance when interest rates go down. That's really the best way to get ahead on both ends here. So anyways, hope you have a great week, and we'll keep you posted and see you next week.